Indian banking syllabus, what we have in India. And then combine it with applied kind of economics, where how monetary policy is operated or operates in India. So I've been trying to do both. That's why I have the data, etc., to see how the money market has been behaving. Now, yesterday I abruptly stopped when I started talking about LAF. So, what is LAF? Liquidity Adjustment Facility. So, whose adjustment is RBI initiating? The adjustment of liquidity in the monetary system, which is essentially consisting of what they have in mind is banks. But of course, there is a role for non-banks which do not come into the picture. So banks require cash, banks give out loans on the basis of deposits it collects. Then there is a mismatch of supply of funds and demand for funds, so there is a liquidity problem. Sometimes supply is more, sometimes demand is more. So Liquidity Adjustment Facility program of the Reserve Bank of India essentially does a repo market. ILF had 4 items in the basket, you saw that. But LAF operates primarily or only on the basis of the repo and the reverse repo instruments. So what is repo? Let us recall what the repo is. Repo is when there is a shortage of liquidity in the system. The system I'm talking about is the banking system. Then RBI would inject funds. Okay. They can do that in alternative ways also. They do that, which is medium-term instruments they use. It's like CRR or open market operations. But very short-term liquidity adjustments, day-to-day basis, sometimes twice a day, they do with the repo market. And of course, there's a market thing here, where RBI doesn't come into the picture much, except for some role for one of the primary dealers of RBI. Primary dealers of RBI are essentially satellite organizations RBI has created, which can perform some of the functions with respect to the money market on behalf of the RBI. So RBI need not get involved all the time directly. There are primary dealers they have created. They are like kind of profit-making organizational institutions which have a revenue, which has a cost side, and they do business the way a business unit does business. Now, with the help of RBI, somewhat autonomous. What I mean is somewhat autonomous units, like IIT Kanpur, IIT Madras, IIT Bombay are autonomous institutions, but after all, they are under a holding company called Ministry of Human Resources Development, MHRD. But they function on a day-to-day basis. IIT deals with it, but that doesn't mean it doesn't have any connection with MHRD. So these primary dealers do the job. Now the very short-term adjustments are the LAF thing, monetary adjustments. So they are very short-term money market instruments in India. They are used the way they are used, essentially with the repo market, through the repo market. But remember also one thing, there is a repo market also in existence, which is the market repo, where RBI doesn't come into the picture. Banks within themselves operate a repo market the way they operate a call market. But I have no data on that repo market. I heard about it, no information on RBI side. And even DFHI call market intervention information is not there even on RBI side. I haven't found it. I looked for it. Call market is essentially the market call market data is there, but the DFHI portion is not there. Now this day-to-day mismatches in liquidity, imbalances in liquidity is managed through RBI. So if there is a shortage, it would announce a repo auction. They're done through auctioning. So they would invite the bidders. And who does that? I think the jobs are done by the primary dealers. They are the main, what you call, the money market underwriters. Money market underwriters RBI directly doesn't get involved much. I think they do their job through primary dealers. These organizations they have created. And in the share market, for instance, you have the underwriters for primary shares and the brokers and the dealers for the secondary shares, etc. Here, these primary dealers are doing all that job, the brokers and dealers job and the underwriting job. And it operates through the repo and the top repo. And now, this is really market determined repo sometimes because, but it's still not purely market determined because RBI would announce a repo rate, pre-announce a repo and reverse repo, like a monetary policy instrument. Like RBI would announce what the CRR value is going to be. Now, it's going to remain there for a few months at least. If not a year, or more than a year, it will remain. So, if you say the market determined, in the sense it will look up what the liquidity situation is and what kind of monetary policy they want to pursue, whether a relaxed monetary policy, which is called expansionary, or a tight monetary policy, which is called contractionary. It would preset the repo rates, and when they change, they announce it even on TV. They come, somebody from RBI, they announce, and they're called new monetary policies. Beginning Monday, 21st or what? 22nd of October, new monetary policy. I heard that there's a monetary policy coming up end of October, after the Puja, Sera week. They're going to announce a new monetary policy. I heard that on TV. So this is what they have been doing, and therefore the repo market has become a very competitive, so short term, it's just like call market, very short term, daily rates, hour to hour call rate varies. And sometimes repo auctions, you have seen data, 50, 40 times a month. How can it be unless there is more than one auction a day? How can the number be, total number of auctions in a month, 50. Total number of days can be 30. At most 31, minus the holidays. So it has to be more than one auction a day. This is what I told you when I showed the repo data. Now let me give you an idea about primary dealers. So ILF had a basket of instruments. LF has only the repo market to operate, with which it operates. Alright, liquidity adjustment facility is very short term. Now let me tell you about primary dealers. These are the organizations I'm mentioning, and I talk about often DFHI, Discount and Finance House of India. So primary dealers. Okay. These are market intermediaries, essentially like brokers, and they also probably do the underwriting job. When new shares, government shares, like government bonds are sold, etc., government-aided securities. They began their operation in 1996. So you can see the 1990s was a reform decade. A lot of new things happened. 1996 we started, which is nearly the end of that Manmohan Singh, Finance Minister, Narasimha Rao, Prime Minister era. Nearly end because it ended in, the election was in 1997, I think. No, the election was in 1996, so it's nearly around that time, end of that period. And essentially, the objective is to support the government borrowing program. Government borrows money by selling government-aided securities, open market operations, and also treasury bills. Treasury bills, even you can, I can buy from a primary dealer. You have to just locate a primary dealer, like a shop. You have to locate where the big bazaar is located and go to big bazaar and buy it. So it's a government borrowing program, and of course strengthen the securities market infrastructure, because if you have well-defined, well-functioning intermediaries, dealers, then the market functions more efficiently. You don't have to run around and etc. You know where things are available. And of course the liquidity issue is always there. Primary dealers have an important job since they operate in the money market. They have to look upon the liquidity aspect. So they should be carrying a stockpile of government securities for the repo transactions. They should carry some amount of cash to use in the repo market or whatever. Okay. And one of the primary dealers operate, you know, at least one operates in the call market, DFHI. Very important. It has even its own rate compared to the market ordering, which is interbank ordering. So primary dealers have been in action. And then in 2003, there was a famous FRBM Act, 2003 FRBM Act. I'm just not going to crowd your mind with too many of these details, but I'm just mentioning as a general knowledge thing. This is a very important one. FRBM Act 2003. The Fiscal Responsibility and Budget Management Act, whereby Reserve Bank, very important act, why I'm telling you, whereby Reserve Bank of India was prohibited, was barred from participating in the primary market, money market, effective 1st April 2006. Imagine, earlier it used to be Reserve Bank of India doing all that job, and that famous thing they used to have, this amount of money government needs, this amount of treasury bills, therefore they are selling, nobody there to buy, and then that what I call that what's the term I used? The forget the term. Forget the term. Let me check. That devolvement issue was there, therefore RBI will have to buy it. And of course, often RBI didn't have money, so deficit financing. When you collect cash from the system, you're not injecting fresh funds. So you avoid that problem of deficit financing. But if you have a devolvement issue with RBI, and RBI cannot be carrying a whole lot of extra cash all the time. It's not a business unit in that sense. Alright? So it will have to print the money which it has the right to do. So this is very important. Fiscal Responsibility and Budget Management Act 2003, which debarred RBI, it gave 3 years of time. From 1st of April 2006, RBI is no longer going to be operating in the primary market, like selling of bills of government on behalf of the government and collecting cash. Primary dealers will do that. No longer RBI, responsibility over. So it's slowly government is trying to discipline itself. RBI, of course, has been telling government to do so, but the question is whether government listens to it or not. Now you can see there was an initiative taken. Like the earlier one you saw with respect to ad hoc bills, they completely stopped, but they replaced it with ways and means advances for short-term advances government requires from the RBI with an interest, at an interest cost. Okay. So there has always been this kind of a thing. So what happened then, after this act, when RBI was stopped, who would do the job then? DFHI was one institute and a few primary dealers. That's where there was an internal group of the RBI. They always have an internal group, you know, like forming a committee here. Dean ko le liya, ek ko, ek do ko, do teen faculty ko le liya. Okay, sometimes we also have a practice of putting student representatives, form a committee to look into some issue. So these are called internal committees of the RBI, working groups, internal committees, etc., where they decided now to open this primary dealership permission. Technically licenses would be given to banks also. Alright? Banks can open a subsidiary, like banks were allowed to run mutual funds, which are risky business, not part of the normal banking operations, but as of a function of a subsidiary. You have to open a subsidiary which is not using public money as deposit money to do that, but can run mutual funds. So SBI, Magnum and Canara Bank can something, the famous mutual fund scheme they had, the various commercial banks had, through a subsidiary. So now what they're saying is that after this act, etc., when RBI was stopped from functioning in the primary market, or government securities essentially, they said, now who is going to do the job? We are going to create more primary dealers. How we are going to create it? Well, banks who are flush with funds, have surplus funds, etc., profits, etc., and we will help them with a corpus. They can create a subsidiary unit which doesn't do normal banking operations. They are primary dealers, just like mutual fund companies. They are created. So this is how the open market operations, etc., would be carried out from now onwards. And no RBI business. But RBI side carries the data on open market operations. RBI side would carry the data on repo, reverse repo, under LAF scheme. So the job is done by the private dealers. So I have a little bit old notes. I'm sorry, I'm looking for the data, but this data is often hidden in one sentence, two sentences in one of the reports. It's very difficult to locate that. I'm trying to locate through a PDF file. You go for a search and you locate that in their annual reports, but how many annual reports you can go out and look for it? Give a search, then it colors that, those words or whatever in the entire text, 1000-page text. And you have to look for it where the information lies. A few years old information I'm giving. There were 17 primary dealers were created by the UPA first government, which ended in 2009. Around that time, up to that point, 17, of which 11 are standalone primary dealers. Standalone means they are registered or licensed and registered as a company which you and me or somebody has created, all right, as a primary dealer, standalone primary dealers, and 6 are subsidiaries of banks, primary dealers, bank subsidiaries, all right. See? Maybe the number has gone up more. I don't have the exact number. Now, this internal group, they said about primary dealers' activities. I don't know whether I will be able to show you notes. I will try to show you some data today if I can. I missed the class, half a class yesterday. Let me give you an idea about how the business is done by the primary dealers. Essentially, they have an underwriting commitment. Now, they will have to do the job. Government wants to collect money, borrow money. Government announces that information goes either via RBI or directly to the primary dealers. And then primary dealers, how they would operate. Okay. The underwriting commitment of a primary dealer or of primary dealers is divided into 2 parts. Underwriting commitment. Underwrite means the responsibility you take to sell something. Essentially, it means underwriting a share when a company closes new shares. The responsibility you take to sell the shares. So, companies say, I need this much of capital, equity capital. So, this much, what you expect the market price is going to be, how much shares should be sold, how much capital therefore I will have, and who takes the responsibility. Often a big company gives the underwriting job to 3-4 underwriters. All right? So, the underwriting commitment of primary dealers since 2006, after RBI operations were stopped in the primary market, there are 2 parts: minimum underwriting commitment and additional competitive underwriting. The underwriting commitment of PDs, primary dealers, is as follows. MUC, minimum underwriting commitment, and ACU, additional competitive underwriting. Additional competitive underwriting. Now, this arithmetic that I will show you, I feel uncomfortable a little bit, but let me tell you still what I have in my notes. MUC of each PD each primary dealer. Around that time, 17 PD stuff when it was there, was at least, it would ensure that at least 50% of each issue is covered by the aggregate amount of MUC of PDs. At least 50% is covered. So it's a commitment. You have to buy, PDs will have to buy or sell. Government is announcing an amount of sale of government bonds or treasury bills or whatever to get cash. Now, MUC, minimum underwriting commitment, if there are 17 PDs, they should cover at least 50% of the total value. That means each PD will have to buy at least of 3%. Then it will be 3 into 17, 51% down. So 49% now remains. This is the minimum underwriting commitment. Each PD will have to buy 3% of the amount that has been declared by the government that they want to sell and therefore get money from the system. All right? 3 into 17, 51% हो गया, 49% पड़ा हुआ. The MUC is uniform for all PDs, irrespective of their capital or balance sheet size. So, given that there are 17 PDs, each PD is required to underwrite about 3% of the notified amount of each auction as MUC. All right? Notified amount of each auction as MUC. Okay? The remaining portion of the notified amount is to open to competitive underwriting through auctions. So there has been no auction there, in fact, the first part. Minimum underwriting commitment, no auction is required. The remaining portion has to be auction. Who wants to buy how much? All right, 49% remains. Suppose your banks and PDs are all sitting there. Who wants to buy whatever? Each PD is therefore required to bid in the SEU for a minimum of 3% and not more than 30%. There they put a limit. Now PDs are very probably, they think they will always be willing to buy. So they put a minimum of 3%, each can buy, all right, and a maximum if they really like the sale, the thing that government is selling, maximum they can buy of 30%. So there is no compulsion there. And by this kind of a bidding process, they have found they are being able to sell the entire government account, whatever government wants. So the minimum underwriting commitment requires every PD to subscribe to 3% of the notified amount. Then they can go and buy, if they want, they can buy a minimum of 3, all right, not less than that. And if they really like, they can go up to a maximum of 30. Suppose somebody purchases 30, that means what? 49 minus 30 is 19% remains. 19% can be picked up by 1 or 2 more PDs. So all PDs need not get involved in the SEU, additional competitive bidding. Competitive in the sense, not price competitive. Suppose it's a repo market, it's not a price competition going on. It's a competition in terms of amount you buy. Quantity competition going on. Remember, competition in microeconomics or economics is often explained in terms of price competition. What price do you charge, therefore what price I charge. That's kind of a competition. Here, another kind of competition that goes on in industrial economics and microeconomics is the quality competition. What features you offer, what features in my car is there. And we compete with each other. But here they're talking about the amount you want to buy. ठीक है, जैसे कुछ भूखा आदमी को आप बुलाए हैं, आप पूछ रहे हैं कौन कितना खा पाएगा. Okay, so food is served. So they are competing. I've seen in marriage, wedding receptions. I don't know whether it happens here. In wedding receptions, I've seen a couple of people are just competing and so how much they can eat of a few items. Have you ever heard of this? Probably not. It's a joke, you think, isn't it? I've literally seen, they're competing. They don't look like big, hefty fellows either. They're pretty thin guys, but amount they can eat. And of course, there will be a shortage after that, because nobody expects to cook so much food. So this is how it went. All right? This is prime materials. Finally, I end. It looks like I won't be able to show you the data today. I will show them to you on Thursday. I want to talk about a little bit about discount and finance house of India because I have been referring to that quite frequently. Discount and finance house of India. So the last thing that I want to talk about as lecture, part of the lecture, is the Discount and Finance House of India, DFHI. Discount and Finance House of India. This is the one I'm going to talk about. And this minimum underwriting commitment and additional competitive underwriting, I hope you have understood what the PDs have been doing, at least around 2007, but I exactly don't know whether the number has changed, and some numbers have changed here very quickly because I don't have the latest 2011-12 data on this. Now let me talk about the Discount and Finance House of India, which is the oldest private dealer, the most important private dealer, which RBI created for the, I think they created this for various purposes. One of them was the bill market, another one was the call market. Now, let me give you an idea. As you know that the banks are always managing cash. There is an inflow of cash, there is an outflow of cash, and therefore they are all day long banks are dealing with cash. And then there is a headache of SLR and CRR for which they require extra cash, just not for their own business, because these are the rules and regulations. For SLR, they have to have cash and gold and unencumbered securities, etc., and current account deposits with other banks. You have seen that SLR. They have to show all that, fortnightly basis, and CRR is weekly. Now, therefore, banks often require discounting and rediscounting facilities. What is discounting facilities? Discounting would be like, I bought some bills, government bills, now I need cash, I go to RBI and say discount them and give me cash. That means temporary borrowing against the bills. And what is rediscounting? Suppose I have a commercial bill which I bought at a discount from the buyer and the seller of goods, commercial bill, where the bill will be paid later, 3 months later, which is already bought at a discount. Now I take it to somebody, another bank or RBI, and rediscount it. That is rediscounting. Already it has been discounted when I purchased it or whatever, and now it is getting rediscounted. Now, and CRR, SLR I have already mentioned. So therefore, this is, we have a very much, our democracy, our parliament system is very much, it's interesting. We got independence from the Britishers, but we adopted many of the systems. One of the oldest systems that is still functioning in India, along the line of the British system, you know, the Indian Administrative Service. In the pre-independence era, it used to be known as Indian Civil Service, which copied the British Civil Service system. Later, the name changed, Indian Administrative System, the IS officers, for instance. And it got extended now. We have IRS officers, revenue officers, looks after customs, etc. We have Indian Railway Service there, Indian Foreign Service there, IFS, and another IFS there, Indian Forest Service, various kinds it got it. But the basic model was copied from the British system. Now, in our monetary system and various other places, in democracy, for the democratic systems, we have the parliament, etc., is very much the British system, not the American system. There are two major models there, in parliamentary democracy or whatever, or in democratic countries. Parliamentary democracy and presidential democracy. The presidential model is, for instance, the US model. The parliamentary one that we follow is the British. Another thing that we have been following is that money market systems, for instance, is that the bill market, the existence of a discount house who is carrying cash and willing to discount bills if you need cash. You don't have to go to the central bank all the time. You don't have to go to another bank or another institution. So, Discount and Finance House of India, when it was created, is essentially this kind of a stuff existed and facilitates money market transactions in the British economy. and is the right hand of the UK Discount and Finance House. They have many houses probably. They are right hand of their central bank also. The central bank, typically what they do, they are like intermediaries. So the central bank doesn't get involved. The intermediaries are doing the job in the money market. Banks को कब cash चाहिए, कब surplus cash है, कुछ invest करना चाहिए, चाहते हैं, मैं देखभाल करता हूँ आपकी. Now, traditionally in India, there are a lot of non-banks institutions and their merchant banking activities like the IDBI, NABARD, SIDBI, Exim Bank, etc. And RBI often helps them out with loans and advances, which they used to do a lot earlier. And therefore, the facilities in India, in the developing countries, have gone beyond discounting. Like banks who are established institutions who require cash would go for a discount house. But in India, we required always something more than a discount house. We require something like a funding agency. So RBI's job earlier was two types. One is the traditional discounting, which is the English model kind of thing, money market helping out. Another one is directly funding creation of institutions, directly funding rural credit, directly funding industrial development through another institution like IDBI in case of industrial development, NABARD in case of rural credit. So the problem in India was the Discount and Finance House of India, which was created. Why would it be created first of all? Because we required more than discounting facilities, just not temporary lending. We required funding organizations. Suppose at IIT requires some cash, temporarily borrows money from a bank. But IIT requires funding to develop the labs. नहीं इधर में बैंक आएगा नहीं, क्योंकि रुपया कब वापस आएगा भगवान को. So you require either government or somebody to do it. Sometimes poor countries go to international institutions, World Bank, IMF, for various kinds of things. So what was happening is that India has been thinking about developing a Discount and Finance House of India to help the money market, but they always had the headache that there are big loans that have to be given with Discount and Finance House of India won't be able to manage. So RBI was always involved. There was a early 70s, there was a thinking going on in the Indian economy when I was a student, I remember, early 70s. And they were recommending to set up a Discount and Finance of India, and I tell you something, in India, Britishers may have left, but when I walked around, looked at the English language that my teachers, my parents wrote, my good classmates, the good ones wrote, the books they would read, or write, or the higher education they will get, there was a tremendous interaction with the Britishers, or borrowing from the Britishers. Now, things have reversed. There's a lot of American influence. But in my childhood days, the Britishers that they ruled here for, or stayed here for 200 years, they may have physically left, but they left behind a lot of influence which you still find. So there was a thinking going on about setting up a Discount and Finance House of India from the 60s, early 70s. Then in 1979, there was a famous working group of the RBI called the Core Group, C-H-O-R-E. Chore or Core, I don't think you would be pronouncing his name Chore. Anyway, the Core Group, which spelled out the details of a Discount and Finance House of India. And it was only in 1988, which is 7th plan. You studied all this good in the previous course. Only in 1988 that the Discount and Finance House of India was set up. Discount and Finance House of India Limited, it was called. Neither public limited nor private limited. Government of India committee, Government of India companies have no PVT or PUB. Private corporate, the corporate sector companies, shareholding companies will have, you see, PVT or PUB LTD. And the Government of India, if you look up these companies, you will see only LTD. And there the 100% share belong to the, this is another third type of LTD companies, very interesting, where the 100%, essentially it is government owned company. 100% share belongs to the Government. These companies are now sometimes going through disinvestment policies. Government is selling off their shares, some of their shares, to other companies, private companies, to workers, to management. This is the disinvestment program going on in India. Earlier, which was an entirely government-owned company, is going through a process of disinvestment. So government is taking its hands off. It's not 100% monopoly now, 100% government owned. So this LTD company was set up as a company with paid up capital of 200 crores. What is paid up capital? I explained that to you. The amount of shares that it can sell to collect money from the shareholders. So the paid up capital is announced in the constitution. So the company had a paid up capital of 200 crores. Now, who bought the paid up capital of DFHI? The paid up capital of DFHI was with the RBI, 28 public sector banks, 28 those days, 28 public sector banks were 21 public sector banks plus 7 subsidiaries of SBI. Okay? And some non-bank financial institutions, maybe LIC, maybe IDBI, they contributed to the paid up capital in the ratio 5:3:2. So RBI would be giving half of the paid up capital. Alright? 28 public sector banks will give 3/10 of the paid up capital, and non-banks will be giving 1/5 of the paid up capital, and they would sum up to the entire paid up capital that the Discount and Finance House of India had of 200 crores. 200 crores is nothing today, paid up capital. Look at the amount of this kind of figures that come out because of scam and all that. Lakhs of crores they talk about. And imagine those days, 200 crores was a big amount. You're setting up a national institute which will operate as a primary dealer or intermediary come this underwriter in the money market with only 200 crores. आजकल छोटा company 200 crores से हो सकते शुरू हो रहा है India. Small companies starting out with a paid up capital 200 crores. But imagine the dimension change in numbers that have taken place in India. 200 crores is nothing. 200 crores means, okay, compared to an institution like a bank which deals with cash, or a non-bank, is not a very large amount. For a company, it's a very big amount. Maybe a medium-scale company or a large-scale company, not a small-scale, sorry. Medium-scale or a large-scale company may have a paid-up capital of 200 crores. A financial institution setting up. Dimension of money has changed enormously in India. This is unbelievable. We talk about thousands of crores these days only. Thousands of crores and lakhs of crores sometimes when the number is really big. Not crores anymore. Okay. So in addition to 200 crores, it will get a refinance facility from the RBI of 100 crores. Alright, RBI, 100 crores, and also some additional refinance if required, they can get from the public sector banks. But you know, those days public sector banks, only a few of them were making surpluses, profits. State Bank of India maybe you find 3-4 more. Most of them were running at a loss. Not now, those days. So if you want refinance from a bank, I don't know you got it, except for State Bank maybe or 1 or 2 more banks. Already you are saying banks together put in the ratio 5:3:2. But 5 ratio is 5/10 is RBI, 3/10 is banks together, 28 public sector banks, and 2/10 is the non-banks. So this is how it's set up. So where did DFHI go? DFHI is not a developmental organization. It is going to look after the liquidity system. It's a private dealer. So DFHI started working in call markets, treasury bill market, commercial bills market, which is very much so in England. Commercial bill market is heavily indebted, heavily dependent upon in England, upon the discount and finance house or houses in England. Then it deals with government dated securities, that means open market operations they got involved with. Now it's entirely they are doing it. Earlier I'm talking about. And initially it was a discount and finance house, then RBI started thinking about private dealers in the 1990s. I told you that discount and finance house of India was thought to be the main private dealer. Like the main commercial bank in India is which one? All are commercial banks. So which one is the apex commercial bank? State Bank. So in India we have a hierarchy system. The main private dealer, this was the guy. This is the institution. This discount and finance house of India. And this is how they started operating. Alright? So you have a picture about the institutions in India, right? Money market institutions, some idea. RBI क्या करते हैं, private dealer किसको? क्योंकि किताब पढ़ेंगे कल RBI के एग्जाम देंगे, private dealer question आ गया. You can write a few lines at least. And some background, you know the LIF system we have, a very important money market policy institution operated by the RBI, but it is actually executed now. Conceptualized maybe by the government and the RBI, but it is executed by the private dealers. It is run. Like education policies are conceptualized by government, but it is implemented by, say, engineering education in India from the government point of view are implemented by some government engineering colleges, regional ones. At the state level, at the national level, they are the IITs. You understand what I'm saying? So private dealers are implementing them, are executing them. So the last topic, one more topic remains, but I want to show you some data, which is very interesting. Now, how much time remains? Probably 5 more minutes. So it looks like not a good day for data. And as usual, because yesterday I missed, so I miscalculated. But how many slides? Oh, I have 22 slides. Okay. So I will take this data business. I will take the data business. Come please on Thursday. It's a very important class. I will show you the data. Not very complicated. I will show you the data, CRR and all that stuff. Open market operations of these critical years in India. Loans, advances, I will show you that. ठीक है, 22 स्लाइड दिखा दूंगा और आपको फाइल भी भेज दूंगा. क्या है आप देख लेंगे PowerPoint में. Now, is the hangover from Antaragni over? Now, what's the meaning of Antaragni?
Unleash the fire within.
Huh? The fire of?
Unleash the fire within.
Unleash the fire. My goodness, it's dangerous stuff. Fire on campus all of a sudden. Both problem हो